We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
Yes, sir. Happy Friday, Rob.
Dude. Oh, wow. We got a bell. You're making big updates to the studio while I'm not there.
Yes, sir. Big week next week in New York City.
I see a raging bull behind you.
Yes, sir. Dominating a bear over the city. We got our friends at Plume, the Nest. Shout out to Plume, of course, guys. Powering the Nest, the tokenization tower. Rob, You missed it here. We're planning the event with Teddy for DAS week. It's coming quickly. We're going to be hosting a really big side event here on Wednesday night, Rob. Should be a banger.
I'm excited. We've curated the event such that, Andy, we met in college. You had your time or two going to the bars around here. I know we went out, had a lot of fun.
Barely.
Everyone loves a good ratio. And so we've curated the ratio for this event very, very carefully, very, very thoughtfully, such that we have the ratio of crypto natives to the institutional folks the way that you would want the scene, if you will. So yeah, I'm excited. Look, we were wearing suits in DC. This is all part of the repositioning of the Rollup.
Yes, sir. Well, let's get into it, guys. We got today's topics. We've got a full slot. We got the Nest, of course, powered by Plume, our friends in the Tokenization Tower. We've got markets and weather. It is warm today. It is sunny over here, Rob. I'm sure it's nice down in Florida as well.
Before we move off the Nest, Andy, I feel like we're gonna have to name that bull something or someone.
This bull?
Yeah, I think we're gonna have to give the bull a name.
Okay.
And maybe one day we'll name the bear too. But
we've got to. Yeah,
I think we're gonna have to name the bull something like something that starts with an H and rhymes with Piper Liquid.
Nice. We've got the Theo team joining in today, guys. They're launching a stablecoin on Hyperliquid,
Yes.
THUSD, tokenized gold backed. We're going to talk about Hyperliquid. We're going to talk about what they're doing. We've got the first digital founder as well, so very stablecoin heavy show today. They are the creators of FDUSD, something that you probably have heard of. Guys, today's topic is powered by Trezor, the best hardware wallet on the market. Shout out to Trezor, Trezor.io. Use code ROLLUP10 to secure your self-custody, to secure your coins. Rob,
I've got my Trezor. Look, it's working, and I'm excited to get to take security into my own hands, take custody into my own hands. I'm pretty stoked for what we got coming up. Obviously, great week in DC. I think this is. I mean, we were joking around about it, getting calls from Gary and everything, but look, this truly was landmark regulatory guidance that we got from the SEC and the CFTC.
Definitely.
These two agencies have essentially been at war with each other for their entire existence.
Yeah.
And this is the only administration where they've decided to come together and work together. And crypto is essentially the #1 priority of both of these agencies. So it's incredible to see. I'm also excited for what we've got coming up. Digital Asset Summit this upcoming week. So I'll be back in New York. I'll be joining you there in the Nest. Wow, that view behind you just looks gorgeous. I'm excited to come back.
Yeah, it's a great day today.
And then we go to Cannes for ETHCC.
Yeah.
We were considering going to the FinTech meetup, but we decided we're going to join our friends at Aave for DeFi Day, which I think is where a lot of innovation is happening. I'm excited to be proven wrong because in DC, I was of the mind, and you were fighting me on this, that policy actually is much more interesting than what is happening on the technology
Much more
side.
interesting? No way.
The way in which they've defined these things is been up for debate for so long. You don't hear anyone debating on crypto Twitter now about the 1000th L2 and its structural architecture and its design, because it's all the same now. Everything's fast and affordable and secure. We've solved the blockchain trilemma, but what we haven't solved is the regulatory structure of a lot of these things. And so I found it quite interesting. Digital securities, digital commodities, digital tools, these things, stable coins, what they're going to come out with next. I think a lot of value accrual happens on the regulatory moat of a lot of these companies. We've got pretty wild sound effects coming in behind the scenes. Not sure where that's coming from.
What?
We're gonna fix that. But It's
Yes,
always
sir.
an adventure here at the Rollup. I hope you guys enjoy the new standby because we had some fun. We were in an Uber. We were trotting around DC with our friend Chris from Chainlink.
Yep.
And man, you got a call from Gary. What did he say?
Yeah, Gary's screwed, man. Gary wants to know if he can come back into the office and come back on the podcast and talk about the state of crypto regulations, but I think we hung up on him. So, guys, it's a warm, nice day today. Let's get into the markets and weather and get this show rolling.
But first,
Let me tell you about Frax.
go to Frax to learn more.
Guys,
Andy,
it's 51 degrees. It's sunny. It's hot. It's warm in the studio today. It's a beautiful day in New York. It almost gives you early spring vibes. Powered by our friends at Relay. Shout out to Relay. Powering cross-chain swaps at relay.link, guys. Check them out. Yeah, it's a nice day today. Love to see it. Feels like a slight bit of spring. I'm looking forward to having some drinks after the office, after the show today. Let's flow into the markets, guys.
yeah, it's about 30 degrees warmer here in Florida, and we are pretty much flat on the day. Not a whole lot. Bitcoin's down. Nope. Bitcoin essentially flat. Ethereum up a little bit, holding above 2K. I also noticed just a couple of things as I took a scroll here. These things aren't on the board, but I noticed Polygon is kind of surging. They've had some good announcements as of recently. I also saw that Eigen Cloud surging as well. On the equity side, we had the founder of, it sounded a lot like MicroStrategy, but it wasn't. It was someone who is smuggling GPUs into China. His company is down quite a bit today.
Yeah, I saw that like 27% or something like that.
Down 27%, smuggled $2.5 billion worth of NVIDIA GPUs into China. Obviously, the US and China,
Dude.
this is a highly debated topic. There is not sanctions, but essentially export controls on NVIDIA GPUs. And so they prevent NVIDIA from selling into the Chinese market, at least this particular GPU. We have agreements set forth that allow GPUs of a lower grade to be sold into the Chinese market. But this guy was smuggling. This is something that has now been confirmed. Everyone was speculating this, but now this is proven to be the case, and his company is paying the price for it.
Our digital assets market price is powered by Zama, the leader in privacy and confidential applications on Ethereum. Guys, go to zama.org, learn more about Zama, start building today.
Before we leave off the markets, the other one is BitTensor here, up 10.5%.
And Templar.
These AI coins are surging. Seems like they've pulled back a little bit, but up almost 50% since mid-February.
Yeah, Templar was mentioned on the
NVIDIA
podcast with
conference.
Chamath and Jensen Huang. That was particularly interesting. And yeah, it was just talked about at length about decentralized training. So, I mean, yeah, that token and that project is getting mainstream kind of like clarity now and mainstream expansion. And so
Could be why
people call it the Bitcoin of AI.
Could be why Eigen is seeing a little bounce here as well.
Interesting. Yeah, they're definitely in the AI world more than previously.
Yep.
All right, guys.
Let's go to our flagship AI team, which is Near. Near is the blockchain for AI agents, agentic finance, and applications that are leveraging AI on top of blockchain infrastructure. These guys went ahead and they built the blockchain, but they are an AI-first company. They are building the blockchain for AI. Near is doing incredible things, and we are proud partners of Near. Go to near.org to deploy Ironclaw, which is their security-tight version of OpenClaw, and you are going to want to be involved in the agentic future. Use Near, transact on it. Near Intense, also tremendous product. And here we've got the first piece of news from the Tokenization Tower, the vibe coding experience in Google. You were using this a little bit, weren't you?
Google Stitch.
Google Stitch.
Is this Google Stitch?
I believe this is Google Stitch.
Nice. Full stack vibe coding turn prompts into production ready apps. No, this is a separate one. This is Firebase integration and kind of taking over senior development, I believe. And so it's talking about this AI studio, a completely upgraded vibe coding experience, turning your prompts into apps. Yeah, I mean, I was messing around with Google Stitch last night, trying to create some graphics and some designs. It was pretty cool. Definitely a learning curve and a lot of presets required. But yeah, don't have much to add here on Google AI. It's probably more of a developer focused kind of news piece here.
Yeah, let's keep things rolling. We have some more news here in the pipe around tokenization. So we can go ahead and flip to our next news piece.
Yeah.
We also, so let's go ahead. This was in the Indian Parliament, introducing tokenization asset bill, establishes a legal framework for tokenization of RWAs, including issuance, trading, and custody services. Once again, we're seeing around the world legislation, regulation continue to move forward. The United States is now a pillar of regulatory guidance. Big old change from the era of Gary Gensler. This particular bill introduces regulatory oversight to ensure investor protection and market integrity. Sounds like Democrats are in office there in India. Enables fractional ownership of assets like real estate and infrastructure projects through digital tokens.
Yeah.
Andy, what are your thoughts on tokenization regulation?
I mean, I had a tweet that said my biggest takeaway from DC blockchain was if an asset can be tokenized, it will be tokenized. And I just think that that's firmly the direction that this entire world's heading in. I don't see this changing. If an asset can be tokenized, it will be tokenized. And I firmly think that's going to be the case going forward perpetually. And so when it comes to the regulatory side of things, it's a catch up. It's how do we regulate this market? How do we enable innovation and allow this tokenization to happen without kind of like stifling it? But we need something in place because we're going to get all of these different types of assets tokenized in different formats with different versions of the same asset tokenized. There's going to be all this kind of like all of this separation and fragmentation of tokenized assets is coming. And so I think that from the regulatory side, one thing that I think I'd like to see is setting the standard for the types of tokenization that are approved in a given jurisdiction and kind of like limiting or creating a way to prevent fragmentation of dozens of private companies tokenizing the same public assets and having all these different versions of them. That would be my wish list.
I think this is incredibly powerful. Not necessarily that India is introducing this bill, but we are seeing tokenization really hit stride as regulatory clarity and guidance improves. We will see every asset tokenized. If you're still unsure as to why tokenization provides benefits for these asset classes, you haven't been listening to the Rollup enough. So you should tune in more because we talk about the benefits of tokenization quite a bit. Bottom line is you improve your revenues and you decrease your risk as a result of these things being tokenized. And we get into the details very often on this show. Quicker settlement times, more risk oversight, and greater composability amongst asset classes means more liquidity, more capital velocity, and overall a more healthy ecosystem for our assets. We are going to get to our next piece, which is maybe not so healthy for the ecosystem. We talked about this a lot in DC. There's an ethical holdup or hiccup that's happening, and it's holding up the Clarity Act. We may not even need the Clarity Act. We basically have all of the guidance that we need over the next 2 years. But if there's a new administration that takes the office, they could repeal the guidance from the SEC and CFTC. This is why we want to administration proof the legislation and guidance that we heard. What is holding this up is that Trump's involvement in World Liberty Fi and his meme coins, Trump coin, Melania coin, they are holding this up because Democrats feel like there is this ethical violation between Trump and the crypto industry. He's basically propping up this industry for his own gain. Andy and I both know that there's a lot of benefit to this industry aside from Trump's meme coins and personal value that he derives from this. But World Liberty Fi is just continuing to chug along. Launches SDK targeting AI payments with USD1 being the stablecoin for World Liberty Fi. Andy, what do you make of World Liberty Fi as a project and how they continue to ship despite some of the concerns from the broader crypto landscape?
I mean, I don't know, man. I mean, this headline is like AI payments without data leaking. Like, congrats, guys. I don't know, man. I don't expect USD1 to really compete with actual stable coins that are USDC and USDT. Trump's like not in a good spot. He's just like, the Clarity Act might get slowed down because of his aggressive meme coin and semi sketchy involvement in World Liberty Fi. World Liberty Fi itself has all these rumors. It's honestly on the verge of being a scam. Like it's about as close as it gets. Without Trump's affiliation, thing would be absolutely thrown into the scam category in crypto. I firmly believe that. So without Trump, World Liberty Fi is probably thrown into the scam bucket. But then here we go. They're supporting Myriad Markets as the core stablecoin. They're hosting events. They're doing all these things, but I don't know, man.
Look,
I think it's thrown into the scam bucket.
there's a lot of noise in the whole AI payment space, which is why I'm excited to talk to Vincent. He is our first guest. He's going to be joining us in just a matter of moments. And we're going to get into the nitty gritty around AI payments on chain, agentic commerce, agentic finance, which ultimately is the final frontier of the evolution that we've been talking about on this show.
Yep.
After every asset is tokenized, then you have high quality assets on chain. They end up in DeFi protocols. There's composability. As a result of this, you can create structured products like vaults that are so much more expressive and creative than the current financial landscape. Once you have AI agents managing these vaults, these products, and these quality assets on chain, the plethora of financial creativity is at your fingertips, which is very, very exciting. And so, without further ado, let's bring up Vincent onto the show. There he is. Vincent, welcome
to the show.
Hey, thank you. Thank you for having me. Really appreciative of having us on me on this show today. Thanks.
Absolutely,
Of course,
man. CEO of First Digital, Vincent. You guys are the issuer of FDUSD, a trusted, fully backed, and always compliance first stablecoin. Just give us a little bit of how you got to where you are today, issuing the stablecoin. Obviously, we've seen Genius Act get passed. We were in DC last week talking about more stablecoin regulation that came forward. Give us a sense of kind of your trials and tribulations building in this space, ultimately to issuing FDUSD from First Digital.
Well, as you know, I'm not sure if you know a little bit about our background. We started as a trust company. We're still more of a centralized sort of making sure we safeguard assets. I think that was the most important thing. Back then when we started, custody was a big thing. There was really not a institutional custodian. And then you had the likes of BitGo and Fireblocks and a lot of these companies just sort of popped up. And moving on to 2025, we deemed it as sort of stablecoin summer. There was a lot of new stablecoins coming up. And we wanted to get ahead of the game. We know that regulation at the time was coming to Hong Kong. So we issued FDUSD June of 2023. We went through our hardships, dealing with banks, financial institutions, compliance. As you said, we're compliance first stable coin. We were really looking at first and foremost the priorities, managing and making sure the reserves are safe, making sure when there's any redemptions that those redemptions goes off without a hitch. So those are really the key to operating a successful stable coin. And of course, getting listed on one of the biggest or the biggest exchange in the world of Binance. That was also a great plus for us. And here we are, moving into the agentic payment space. I think that 2026 will be the agentic payment summer. So
it certainly will be. I mean, we are firmly of the belief as well. I'm curious, early on, we saw how Circle, Tether sort of bootstrapped their way to, kind of leading the stablecoin market today. But I'm curious from your perspective, how does FDUSD and First Digital, how do you guys plan to reach levels of scale, right? Because we've seen how, Tether and really not even Circle. Tether has kind of been able to get a foothold in emerging markets and almost be used as the alternative currency or the exit hatch to their native currency if it's experiencing inflation or something like this. They've really gotten a foothold there. What is the primary go-to-market strategy for First Digital to drive this stablecoin towards a market cap upwards of billions of dollars? How will you achieve that level of scale and ultimately that user base when there's so many stablecoins out there in the current market landscape?
That's a good question. I think for us as FDUSD, we're also really focusing on the emerging markets. I think the emerging markets is really where the use cases are a little bit more prominent. There's going to be more people looking at that solution that stablecoin can provide. We've always heard about the unbanked issue, and really, I think with the combination of stablecoin, blockchain, and AI, I think we're closer to that solution than we were previously at any time in history. So, I'm really excited that what we want to do is really build a strong, solid ecosystem around FDUSD by providing not only products and services to the DeFi space. We're building things like agentic payments, as we're doing agentic wallets, but at the same time we want to make sure that the stuff that we put out there are fully compliant, regulated, and that it's our clients first, retail first. For stablecoin, yes, there's a lot of different stablecoin coming to the market, and that has different use case, different focus. But we're looking to grow organically. We're looking at there's going to be room. Stable coins right now, market cap is at its infant stage. It's tiny comparative to where we see big institutions are projecting it to go. So there's tons of room for other stable coins, and I feel that we want to get that infrastructure, our background, our infrastructure, building up the banking rails, everything 100% solid first before we really go to market in a big way.
I was hanging out with a couple of normie friends, which is always interesting to see and hear how they're reading the markets and what is kind of the narrative that ends up catching their eye, because we're so zoomed in. But the things that make it out to them are really have some exit velocity. And the two narratives that were really resonating with this group were, okay, stable coins are really catching wind here because they are really primary buyers of U.S. Treasuries, and so the U.S. is propping this up because this industry can really be a significant buyer of Treasuries. The other narrative is that stable coins are like AI native programmable money. I think maybe they're becoming less and less buyers of the Treasuries, and more they're becoming accustomed to this narrative of AI native money. How do you think AI will end up incorporating stablecoins? Which of these narratives do you think is primarily, is resonating more with the market right now? And is it truly the case that, stablecoins, what benefit do stablecoins have for AI agents rather than, hey, Claude bot, take my credit card, just load it into this browser? Why are stablecoins that much better?
I think if you don't have a stable coin, I think it's virtually maybe not impossible, but it just makes things a lot difficult for AI payments to make those efficient payments instant at real time. I think the real use case for AI payments is also how we can, there's a lot of people building on different AIs now, and with digital currency stablecoin, those bots, those AI agents can really make 24/7 trades. If you want to look at payments, purchasing through merchants, there's also what we were saying, there's autonomous vehicles right there. And we think, if Elon is right, there's going to be a ton of more autonomous vehicles in the market in the future. And those vehicles in itself are AI agents. So if you slap on an AI wallet inside the vehicles, if they need a charge, they don't have to run back to headquarters or to their owners and get the credit card. They can go straight, without a hitch, go straight charge station, bang, pay from their AI wallet with stable coins and done and get back to work, right? So those are just some prime examples of how, evolving that this space will be when it comes to utilizing AI as a payment vehicle.
Yeah, yeah. I've also heard how streaming payments, in the
Hmm.
sense that as AI agents are consuming API keys, making API calls, maybe even training themselves on a video or an audio piece, uh, we are going to move from the subscription-based model to a more continuous streaming model. Uh,
Hmm.
right now, the credit cards. Essentially, charge every month. If we were to move them to, it's simply impossible to move credit cards to a continuous streaming model. Stablecoins are capable of this. Is this is are do you think that this is something that we're going to see happen in the near term, or is this sort of a pie in the sky theory that stablecoin issuers are piloting?
No, you see MasterCard and Visa, they're all scrambling, really, launching their own AI payments platforms. Uh, and, the reason why this is really, I think, a fundamental part of AI payments using stablecoin is the fact that you can fractionalize payments, right? Whereby, and of course, fees. We know credit cards are charging upwards of 2.5 to 4% fees. Those are really high fees. But when you have a stablecoin payment, you're looking less than 25 basis points in some cases. So those are rebates back, those are savings back to the consumer.
Incredible. Well, you guys just launched Agent Wallet. And so I'm actually curious about how you think agents are going to continue to adopt and move into a landscape where they are conducting more of the transactions in consumer finance just on a daily basis. Similar to the idea of giving our agent a credit card number and then just letting them kind of use it on the web. We could also provide private key or some mnemonic phrase, kind of give the agent a wallet itself. Where do you stand on kind of giving your agent access to your existing wallet? Pretty much just give it your password, let it do its thing, versus give it its own wallet, give it its own mnemonic. How does Agent Wallet think about this? Where were you able to integrate?
I think the agent wallet is fine. I think it's really the actual owner that provides almost like an allowance you give your kid, right? Like, hey, you got $5 every week, go spend it the way you want. So you can deposit really, a maximum maybe $100. If there's any issues with the wallets or if there's any hacks, that's the maximum they can really get. But we know that there's a lot of big companies now getting into KYA, know your agents.
Mm.
So there's things like that that we think that's going to really be helpful to protect the consumers and the wallets. And what we've built with our AI wallet, Prism, is a very unique um, proposition where we have a fee splitter. So when your agent makes another payment, well, who's going to pay for the gas? How is that going to be extracted? What if there's intermediate involved in that particular transactions, people that may have some sort of stake in that transaction? So we've built a way that we can fee split. So let's say a transaction is $10,
Mhm.
but then there's 2 cents for gas, and there's also you have to pay commission, you have to pay the taxes. So what we do, we inject those into the smart contract. So for every payment, each participant has their AI wallet that will extract that portion of the payment. So I think that's something unique that we've built in, and it'll help for everybody that wants to get involved in a transaction but does not know each other or want to protect their own interests. So every payment instantly they'll get they'll get it into their wallet real time. So one of the prime example of use cases would be Uber drivers or
Mhm.
Uber Eats. Now if they use our platform, they don't really need to wait 2 weeks to settle credit cards. And Uber, the share ride sharing companies don't have to have hundreds or if not thousands of accountants doing settlements every week. So it's instant settlement. So those are things that I think the AI agent really plays a big part in saving when it comes down to the bottom line, just
Mhm.
efficiency.
We've talked a lot about kind of the idle capital that is required in order to facilitate movement when we're waiting on settlement times. It could be T+2,
Hmm.
T+3, upwards of 5 days sometimes, where you have the money coming into you, but it just takes that much time
Hmm.
in order for it to process through these banks.
Yeah.
By lowering settlement time, we can actually take a lot of the idle capitals. We were in DC, and someone used the figure $27 trillion is capital that people have just sitting there in order to
Idle.
facilitate, and it's just idle, and it's just not really doing anything productive, but we have to have it there because we need to be able to have capital on hand when we're waiting on money to land during this settlement window. And so as a result, with stable coins, we lower the settlement window. What happens to all that idle capital when we are able to make these economies essentially frictionless, right? Settlement times come way down. Just talk us through, like you said, it improves the bottom line, but what ends up happening to a business? They just deploy that much more capital. Can you just kind of walk through the domino effect here?
Yeah, instead of 5 days a week, businesses can now operate 7 days a week, 24/7, and they can really, what they say, money never sleeps, right? We have to look at the different parts of the world that this will be really helping corporations dealing in, say, India with somebody in Miami real time. So agents are able to do settlements in these transactions while we sleep. So those are going to make, your 24 hours a lot more effective and a lot more, prosperous for the company itself. So savings is not only about money, it's also about time. So time is
Yeah.
money, right?
Yep.
Yeah.
One final question here for you. I'm curious if you're viewing FDUSD as more of a payment stablecoin for retail, or more of an institutional stablecoin that you anticipate businesses to integrate, like you said, drive down their settlement times, increase their bottom line. How do you draw the differentiation here? And maybe there's a third category of just, a stable coin that's not for retail human users. It's not really for institutional human users. It's for AIs. Like, where do you draw the line? What are the differences between these things when you're building the stable coin itself?
I think it's back to the infrastructure. Like for us, number one priority is our banking rails has to be really strong, and we have different banks, different parts of the world, not only sitting in one time zone. So for settlements, if we have people in Asia that wants to settle and that wants to redeem, they can do it Asian time. Somebody in the North America, we also have banks that can settle them real time in North America. So it's really servicing our clients in that sense, where they don't have to wait until 9 a.m. the next day to do settlements. I think that's sort of where we are a little bit different, because our financial institutions and the way that we protect the funds, having dual balance sheet as a trust company, so you don't commingle your operating money with your client money. So I think those are really important aspects of
Yeah, we haven't had the best
stablecoin.
track record of that in the crypto industry. Cough,
Mhm.
cough, FTX.
Mhm.
No, good to know that you guys are taking this very seriously.
Yeah.
Really appreciate your time here. Andy, any closing thoughts for us?
Yeah, I mean, I was just on yesterday with the Pantera guys talking about the kind of agentic economy that's being formed, and we spoke about like this identity question with regards to how in a future of agentic payments happening on chain, people actually doing a lot more agent to agent transactions, autonomous kind of agents running out on chain, what that means for the identity of these agents as they interact with stable coins and send stable coins amongst one another. I'm curious from the First Digital side, what the key prerogatives are for enabling agentic usage of FDUSD, and kind of like what actual progress on that kind of agent to agent payment side you guys have been making.
Yeah, we really look at when we do onboarding for agentic agents that it protects the identity of the actual owners, but we onboard them using KYC on the owners and of the agentic payment. So we know that identity theft is a serious matter, and when we don't know whether your AI agent is being scammed by another AI agent. So these are things that we have to kind of foresee in the future, that there's going to be somebody setting up these AI agents that may look at, okay, well, if I can go out and scam other AI agents, nobody knows really who's behind it. So that's one of the major issues that we want to solve, and make sure that we work with really strong security companies that not only can identify the source of funds behind the AI agent, but also know the identity of the owner of that. But at the same time, when his agent makes a transaction, it's credible. So using FDUSD, I think people will know that we've done all of the background screening proper, so that if there are any losses, we can't just go. We have to take the proper protocol of how to sort of retrieve those assets lost within the blockchain. So I think that's the key for us to be a successful stablecoin and AI agent provider, that consumers can feel comfortable that we're not playing God. We don't just go into anybody's wallet and freeze it. We have all of the background information to go with the proper process and internal controls. And that will just make our product a lot more easier to use in the future, when, in the front end, it just looks very simple, AI agent making a payment. But in the back end, it's everything is sort of been, all the I's are dotted and T's are crossed properly.
Yeah, definitely. Definitely. Well, Vincent, thanks for joining us today on the show.
My pleasure.
Hope you have a great weekend.
Yeah.
And let's scale FDUSD.
Thank you.
Billions and trillions.
Yeah. Well, enjoy New York. Enjoy the DAS conference.
Thank you, man.
Take care, guys.
Thanks so much. We'll see you next time.
All right, Vincent. All right, guys, we're going to take a quick break, and we'll be right back with our guests in the studio live at the Nest here at Tokenization Tower. We've got the Theo team building a stablecoin on Hyperliquid. We're going to talk about stablecoins. We're going to talk about Hyperliquid and more, guys. Don't go anywhere. We're going to get them set up in the studio. We're going to let Rob go. Sayonara, Robert. We'll see you soon. Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Guys, welcome back to Stabled Up, our weekly premier stablecoin show powered by our friends at Frax. Check out FRX USD and Frax.com to learn more about their Genius compatible stablecoin. Without further ado, I've got Iggy Iopi, the CIO of Theo Network, sitting here. Iggy, welcome to the Tokenization Tower.
Thanks for having me. This is awesome space. I love it.
Man, I love the suit.
77th floor for those who don't know.
Yes, sir, Iggy. Iggy, you have an extensive background. You guys are pioneering Theo Network. This is a new stablecoin on Hyperliquid. We're going to talk Hyperliquid. We're going to talk Theo. We're going to talk more. But let's set some context here. Iggy, how did you find yourself into the role of a chief investment officer at Theo Network? Walk us through some of your extensive traditional finance experience.
Yeah, so I started my career in private equity at Bain Capital in Boston, working on buyouts. Then went to business school and started a software company that I moved to Bay Area. Ultimately, we grew it to 300 people. We sold it for $200 million. Then went back to investing, but on the public equity side, initially covering tech stocks and software and internet and fintech, and then ultimately covering everything. And then I ended up running pro trading in equities, long short at Credit Suisse, which was a global across all industries. And analysts and PMs reporting to me. Then my partner and I started our own hedge fund, which was seeded by Blackstone Group. And then I incubated a couple other funds. We converted to family office. And then I ran Polygon Ventures, also with a partner for a couple of years. And during that process, I met the founders of Theo. And they had the right vision for RWAs that really aligned with mine. And pretty much nobody else was working on it. So at first I became an advisor, then an investor. And now that they're scaling and they actually got product market fit, I jumped in to help them scale. And for the first time in 15 years, I'm a builder again. I've been an investor, for most of my career.
Yeah. So you were doing kind of all different types of derivative strategies and kind of like alpha seeking strategies in the traditional markets for 15 years or so.
Yeah, so mostly I was doing equities long short with, like I said, with a private equity background. But as part of long short, you have to know everything. Like, so we cover energy stocks, you have to know commodities, right? We cover home builders, you have to know housing market. We cover financials, you have to know interest rates and FX. So when you're like an equities long short, you sort of have like a pulse on, and you talk to management teams from different companies, you see how they're hedging, how they're investing. So you have your pulse on kind of like all aspects of investing.
Yeah, amazing. And you mentioned that there was this ideal kind of state or vision that Theo had for RWAs that aligned with yours personally. What is this vision? What is kind of the tokenization thesis that you believe to be most accurate today?
Yeah, so when I was at Polygon, we did a lot of the early institutional deals like Hamilton Lane, for example, which is like, very big, other $1 trillion institutions. And this was a huge step forward for RWAs, for tokenization, because prior to that, the quality of assets was like really low. It was adverse selection, right? Things that you couldn't sell in the real world, you would kind of dump on a blockchain and hope that this Bitcoin, millionaires will buy it. But Bitcoin millionaires are actually really smart. They didn't buy it. So the second phase was big institutions, really blue chip assets coming on chain. But for a variety of reasons, they put things on blockchain, but didn't use the blockchain. So it's not composable, it doesn't trade, it's not liquid. Oftentimes it's whitelisted permission, geofenced, and so forth. So the vision of Theo was to go to the third step, which is to actually make those financial assets still stick with blue chip, but make them actually usable on chain. Make the liquid composable, and all the wonders that were invented in DeFi, for example, be able to apply that to RWA. So that was the thing that I always wanted to do. And the team was like super crypto native and had a lot of trading background, quant market making, sort of like super smart, both on the algorithmic and the blockchain side. It was a perfect complement to like what I know, which is like relationships on Wall Street, understanding the whole range of like investment products and financial products.
And you guys chose to build this on Hyperliquid. Hyperliquid's had a lot of success as of late, especially in terms of publicity. Iggy, are you very bullish on Hyperliquid?
Yeah, we're very Hyperliquid aligned, but we're not only on Hyperliquid, just to be clear. So we go to wherever liquidity lives. And obviously right now, Hyperliquid is like, a key venue. So, but we are, part of the secret is like a lot of people tried to get RWAs to trade and to make them composable, right? So there's like a lot of, things change on chain very, very, very quickly, right? There was a few months ago, Hyperliquid had a lot of competition. Now they sort of regain, on the prop deck side, right? You had the Lighter and Aster and a bunch of others. And then now they sort of regained a lot of their market share. So you have to really know where liquidity lives. So you are there, right? And you integrate with those protocols, but also that you're not diluting, right? You don't want to be integrating with, you want to be integrated, but you don't want your liquidity to be diffused across 100 different venues. So you have to be always watching and making sure that, you're in the right place. So that's part of like the crypto native kind of a DNA and the Hyperliquid DNA that we have.
Yeah. So what is your personal thesis on Hyperliquid? Do you have one? Like what is
I mean, as far as like as an investor, I'm extremely bullish. I mean,
why?
I mean, it doesn't, I think that's a consensus view. Consensus is right most of the time, by the way, right? So everybody wants to find like when you're right and non-consensus, that's like and then you can brag about it at cocktail parties as an investor. But a lot of the time you just go with consensus. I mean, Hyperliquid is outperforming Bitcoin, for example, massively in the last few months and like year to date. So I think the latest thing is a big success with Unit, right? The trade.xyz, where, you have several assets that are trading $1 billion plus per day. And you had gold trading like hundreds of millions a day. Now oil on trade.xyz is trading. It reached basically for the last 8 or so days, it's been over $1 billion.
Yeah.
And also the most interesting thing to me is the price discovery is incredibly accurate, right? So when you look at when CME futures reopen on Sunday at 6 p.m., you see the on-chain price is within basis points, right? Within a few pennies off of. So you know that the price discovery that happened during the weekend was correct.
So how big do you think this can get? Like what is the, it's trading at like 40 billion right now or so FTV. It depends on kind of the way that you map it. But are we talking bigger than Binance, bigger than NASDAQ? Are we talking kind of like smaller? What's your Hyperliquid bull case?
Interesting. Well, so, I don't, we haven't really like done the full investment case. And I tend to be like very like, model driven and like cash flow driven. But, the beauty is Hyperliquid falls into like the general category of what's working on blockchain now, right? So when I was at Polygon Ventures, we're investing a lot in infrastructure, modularity, L1, L2, data availability, all kinds of, different combination permutations. So the good thing is now we have unlimited block space that's fast and cheap with low time to finality. That was not the case even in 2021. So I would say now is the time for, Hyperliquid runs on its own chain, but it is primarily an application, right, that happens to have its own infrastructure. So the general theme of like applications that actually give people real utility, that's what's going to work in crypto as a whole, not just like in the RWA space. But I could definitely see Hyperliquid reaching, again, I'm not financial advice, DYR, but I could definitely see it reaching 100 billion in market cap.
Yeah. Yeah.
So there are peers that have less revenue that have higher market cap. Yeah. No, not peers, but other crypto projects, let's say, but they don't do the same thing.
Yeah. Interesting. So part of the Theo kind of design here on Hyperliquid and other blockchains is actually by tokenizing gold as this kind of gold-backed stablecoin, or at least partially collateralized by gold, or perhaps fully. Why tokenize gold? What does that give you? What properties does tokenized gold give you to enable a better collateralization property for a stablecoin? Like, what does that really enable?
Right. So there's like several steps. So broadly, so we're going to tokenize a variety of things, even in our like medium-term like plan. Okay. We started with T-bills, then we tokenized gold. The third product we launched is THUSD, which is actually backed by our tokenized gold as one of the layers of how we do it. So you can buy directly tokenized gold, TH gold, right? And the number one benefit there by far is that it's a gold with yield. People have been using gold for 6,600 years as like, medium of exchange and way to preserve wealth and payment. And throughout history, you had to pay to use gold. You had to pay to store it. You had to pay to transport it. You had to have security. You had risks. You had to pay to divide it up, to cut it up. You have to pay to test it, to make sure it hasn't. There's like everything you do with gold has a cost. So with our model, all these costs are covered, right? So there's no asset management fee, for example. Like even if you buy a gold ETF like GLD, there is a cost there, 40 basis points a year. Not terribly expensive, but it definitely does add up. In our case, all those are covered, and you also get a yield. For the first time, we can get into how that works. So that's the foundation for THUSD, which is the gold-backed stablecoin. So THUSD starts with that. So we already have a yield native, actually gold native yield, which is the first time not just in crypto, but the first time in the history of TradFi as well. There were ways to get yield on gold through private providers. You have to KYC, KYB. It's a very extensive process. You have to have high minimums, and it's available only in if you live in an extremely developed financial market like the US. There's never been a product you can just buy, like an ETF that says, hey, here is gold, and it pays you yield. A mutual fund ETF, that never existed. So building blocks for THUSD is TH gold. Then on top, so once we have that gold, now we're a Delta One long gold. What we do next to create the stable coin is we actually short gold in the form of perps on chain and or CME futures to harvest the roll yield. And the beauty of that is, let's say if people are super bullish on gold, what happens in general is the curve, the CME curve that's usually in contango, it starts to flatten out. So there's less roll yield to harvest because everybody's bidding up the physical gold, the near month. But what happens when people are super bullish gold is the funding rates on chain for the perps become higher, right? Because everybody wants to go long in general. So we can, by shorting gold there, we can get a much higher yield. When the opposite happens, like now, people sort of forgot gold for a little bit because everybody is excited about trading oil. Right now, contango is quite normal. We can get 4% yield from harvesting the contango on the CME futures. And there's less of a funding rate that we can get on Binance and Hyperliquid. So the beauty of this strategy is we can go, depending on the mood of the crowd, we can go and collect the higher of the two yields. And when we stack that with the gold native yield, then we basically get a stable coin that with, I don't want to say let's say minimal risk. And the risks are very clear to everybody, right? So it's of course, sometimes you can have market conditions where you don't have the contango and you don't have the yield on chain. But at the minimum, you always get the yield that's native.
Right.
And at the minimum, we can also get the yield, which is TH bill, which is the risk-free rate, now 3.6%. So it gives you much higher yield than just doing the T-bills with pretty much nothing but the protocol risk and execution risk on our side.
Right. So those are the two main risks. I actually had Yuki here from 10bin Labs talking about the yield on gold, and he mentioned that it was anywhere from 10 bips to 50 bips is the expected yield on gold. So less than 1%, 0.5%.
The native yield?
Like the yield that he's able to get on gold, by lending it out or something of that effect. But you're saying that effectively by putting on the basis trade on gold, leveraging CME futures off-chain and the discrepancy in funding on-chain on Hyperliquid, there's enough liquidity on Hyperliquid for the size or the types of volumes that you guys need to be able to facilitate that trade? Because I don't think the on-chain market is mature enough to facilitate this at scale for gold perps.
Right, exactly. That's why we need the CME.
But isn't the difference between off-chain and on-chain where you guys get the yield?
Yeah, so let me make sure there's a couple of questions in there, right? So first of all, the native yield we get is much higher than 10 to 50 beeps. Because we have the scale and we have the sort of blue chip partners, we get the gross yield is 2.5%. And then after our partner management fee, we expect to keep for our investors 2.2 to 2.3%.
I have a hard time believing you get 2.5%.
So that's based on the gold. So there's also in the gold, lending market, there's gold loans and gold leases, and the yield ranges from 10 beeps or sometimes even negative, because in general, again, gold you have to pay, right?
Right.
So from zero, let's say, all the way to 15%. If you're willing to do longer term, let's say if you do a 4-year gold lease and you work with gold miner, that's pre-production, right? They say they're a couple of years away from production. Then you can get as high as 15%. So we studied that market like very extensively, talked to many different providers. We settled in on this particular arrangement to start, because here it's extremely secure. It's over collateralized by 20%, blue chip partners. The borrower has been in business for like almost 100 years. It's actually the largest jeweler in Southeast Asia. So they need to finance their gold inventory. They have a couple of tons of gold typically, and they want to sell jewelry. They don't want to take the price risk on gold. So we will add other as well, potentially a little bit longer term where you don't have immediate liquidity. But hey, so first of all, the native yield we get is higher. And then on chain, yes, the whole idea, one of the ideas behind Theo is that the yields on chain have come down. Right. And there's limited capacity to generate yield on chain. This is not, the DeFi summer anymore. So we will short the perps on gold wherever we can up to the capacity. And then the remainder we'll do on CME. And on top of that, of course, we'll watch the rate. So if somehow, let's say the perps invert, right? We're not going to take the other side. We're just going to do everything on the CME. But CME trades 100 to 250 billion of notional per day on gold. I actually forgot exactly, but it's in the order of hundreds of millions. It's definitely more than 100 billion, right? Not million. So for our purposes, it's unlimited capacity. We can always get that.
Yeah. And then, so the stablecoin backing, effectively, the execution risk from the team is part of it. The kind of change in gold price or change in the collateral asset price. And then on the stablecoin, just by owning this stablecoin, am I getting that yield baked in, or do I need to take the stablecoin and use it in a DeFi protocol or in a market somewhere?
No, that's something you can add on top. That's the whole idea, right? So THUSD, which is the third product,
it's like a yield coin.
That's the gold-backed yield coin. That will work as collateral in Hyperliquid, in Morpho, and Panels. So you can still do all the same things if you want. I mean, most of the projects that we see that try to get you a yield on gold, they just do that, right? They try to lend it out and then generate some kind of return. That you can stack on your own. The whole idea that we'll make it composable and then it's permissionless for you. You can do whatever you want. You can just hold it as an investment, or you can make it very, very active.
Yep. Understood. So the way that we kind of have the stablecoin landscape laid out here is you've got like these yield coins, and you've got Genius compatible, like basically one-to-one backed stablecoins. Obviously, THUSD fits in this. You guys
not a Genius.
No, sorry, into the first
the
first bucket. Yeah, you guys just raised $100 million in the pre-deposit, and you kind of talked about allocating that capital now that it's kind of part of the portfolio, if you will. What does that look like now? Like, what does actually allocating that $100 million into these strategies look like?
Yes, I think we're starting with exactly what we described. So it goes pretty much 100% into TH Gold. So then we get that native, 2.3% yield. And then we're going to do mostly CME to start. So that's part of the reason we're like crazy busy is we want to diversify, right? To minimize the execution risk, we're onboarding with like multiple TradFi FCMs are called future commission merchants. These are people that have a seat, if you will, on CME, where like futures are traded. This is like the canonical gold contract is on CME. So we're onboarding with like other sort of gold OTC desks and things of that nature, so we have like other backups and failovers. Again, the beauty is like the founders of Theo, like they have this quantitative market making background in TradFi. So we're building this extensive system that gives you alerts for anything that can possibly go wrong. For example, our gold loan is denominated using LBMA auction prices. So there's this like the spot price of gold is set twice a day in London. That's not the same thing as the CME. In general, there are a lot of like really smart people in TradFi that are arbing those two things, but there could be a little bit of a basis. There could be bases because of the time, because the first London fix is actually very early in the morning in the US. So we're monitoring to make sure that that basis doesn't blow out. So like any sort of basis trade, the sort of standard things and alerts that you have to look out for. And then so we're making sure that that's covered.
Yeah.
A lot of kind of playing through every different little way that this could fail, and then building safeguards.
Yeah, yeah. And if there's excessive volatility in gold, like we've seen over the past several months, is this something that amplifies or kind of reduces the profitability and effectiveness of this basis trade?
So I would say in general, it's good for TH Gold, which was our like second product, because the more interest in gold, the more people will buy that and just be long gold and get a yield on it, and then still, be able to use as collateral in DeFi. And then so it depends. In general, increased vol, it could be like either indicate like kind of a fear or greed. So I would say it's fairly neutral. But vol, if you look at like on-chain, when there's vol, there's volume, but vol meaning volatility, right? Yeah. So people, active traders are attracted to things that move. So in general, it would be good because it would increase the open interest, and therefore would allow us to harvest more yield on chain. Because on chain yield, at the end of the day, the roll yield on CMEs is not going to be more than 4% for maybe a few hours here and there. It's very close to risk-free rate in general. It's just the cost of capital. But on chain, 10%, right? 9.5% is fairly standard PIN, or it could be a lot higher. So in general, we would like to harvest as much as we can on chain before we go to the CME. So the more on chain, the better for the yield.
Yeah, and that's not just on Hyperliquid. That's going to be across other venues as well.
Definitely, yeah. So Binance has gold perps, and they're there will be more. It's interesting because with oil right now, it's only Hyperliquid. Binance hasn't launched the oil perps yet. I mean, there's a couple of smaller venues, but they don't have them. As far as the big venues, those are there. Yeah, so we will definitely harvest the funding grade ARB everywhere that it exists on chain, up until not moving the market.
Okay. And then when it comes to the kind of community side, token side, we're in this really weird era of tokens, right? Where Hyperliquid has came and set the standard for revenue, for buybacks, for kind of creating a environment that is actually beneficial long-term to its holders rather than destructive. I think a lot of the tokens are destructive in their models. Does Theo need a token? Do you guys require one? What is kind of the financial modeling here for why a token could be involved, or kind of how are you guys thinking about that?
So I was a crypto VC before, so I definitely analyzed the business model of Theo before I invested, and certainly before I joined. Right.
And what did you come to?
Yeah. No. So again, it fits into the application theme. First of all, right? It's it needs to be an application, not infrastructure. Right. Infrastructure is done. Application is actually useful to people. So we're not in a rush to launch the token, but definitely it's part of the roadmap because we want to share our business model with everybody who is a participant in the ecosystem. The key for Theo is a network, right? There's a reason it's called Theo Network, because there's multiple participants, institutions, custodians, fund administrators, tokenization partners, DeFi partners, chains, investors, of course, right? Separate investors actually put money in the vault, which is different from TVL. So there's this multi-layered network effect that we want to build. And of course, if everybody is also a token holder, that gives them an additional incentive to kind of build this virtuous cycle.
Yeah, understood. And then
that's the beauty of I had to use the word Web3, but that's the original promise, right? It's you share, the first Uber driver didn't get rich, even though he was absolutely essential for Uber, or the first 1,000 Uber drivers, right? So in crypto, you actually can make sure that your early users, early adopters are rewarded.
Yeah. What do you think the growth is going to be for THUSD, right? You guys have $100 million in the pre-deposit that filled in 10 hours. Are you expecting to be in the billions this year? Is it like going out and raising capital from LPs? Is it doing it just on chain? Is it a combination? Like how does one scale a stablecoin to the billions and beyond? Like what does that actually look like?
Yes, I think we're going to scale more slowly because we actually want to give people proper yield, right? It's easier to offer a stablecoin that gives you nothing, right? It's like, great, give us the money and we'll just sit on it, and then we'll put it in T-bills and capture a massive spread. Best business model of all time. I mean, look, I'm sure you wish you came up with that. I would say we have visibility of a few $100 million. Yeah, not financial advice or anything, but we wanted to cap it at 100 for the initial like Genesis Vault, because we want to make sure, again, we're very conservative, right? So we launched THBill last year, fine-tuning our tech, our infrastructure on THBill, which is the risk-free rate. It's actually a super safe product. Then we'll launch Gold, which is also pretty much like a risk-off. Gold had its moment, but in general, it's considered a safe asset. Right now, we'll go to this gold-backed, yield coin. So we want to make sure that everything works, well for a bit before we start to grow TVL. So our goal is to I think I was at Amazon way back in the day before I started my own tech company. There was this trade-off between GBF, get big fast, and GRF, which is get right first. Mm-hmm. So during the .com, everybody went GBF, and then they all disappeared, even though they all had the right business model, right? Pets.com had the right business model. It's a massive industry now. So we are more on the GRF side. Let's get this right, make sure we work out all the edge cases and corner cases, and then go big after.
Yeah. Iggy, thank you for joining us in the studio today for this episode of Stabled Up, guys, powered by our friends at Frax. That wraps us up for today on The Rollup, guys. Great week. DC, back to New York with Iggy. Amazing show here today, guys. Thank you for tuning in. We'll see you next week for DAS. Big week at Digital Asset Summit here in New York City. We've got a stacked lineup for you guys. So see you guys then.
Thanks for having me.